Hello, everyone. In this video, I will review the signals provided by Sunshine AI Signals and how they can be used to trade ES500 or MES 500 future contracts. You can also trade using options or ETFs such as the SPY or various leveraged ETFs for the S&P 500. For those of you who have not viewed the introduction video, I strongly encourage you to do so. You can find the video on our YouTube channel right here, Sunshine Signals Introduction. As a brief review, you may recall that Sunshine Signals provides 3 signals daily: the main signal, the short-term signal, and the weekly signal. Each signal will show a buy, range, or a sell. In addition, every morning before the market opens, Sunshine Signals will provide supports, resistances, and a pivot point, which will act as the bull-bear line for the day. Sometimes an EOD sequence will appear, but not always. And if the signal detects a trending day possibility, it will show as unilateral. Here, the signal is showing, this example is showing that the signal is not expecting a trending day. Finally, a reference chart will also be provided pre-market. This is one possibility of how the market could move. However, the reference chart is not to be used as the exact move of the day, but simply a reference. In the following slides, we will take a look at how all of this can work together to help traders find higher probabilities trades in a trading day. Before we review this week's market activities, it is helpful to zoom out and take a look at the larger trend. This is the ES daily chart starting from the beginning of 2024. As we can see, the market has been in a clear uptrend since the beginning of the year. From here, mid-March to about mid-April, the market fluctuated between 5160 area to 5300. And any attempts to break under or above this area failed. And then in mid-April, it did break down under this zone, and it went down to next support, which it also broke through, and then found support at this level right here, the 4960 level. The market recaptured this gray zone last Monday. And on last Friday, on May 10th, it closed right around the middle of the zone. So for the week of May 13th, we want to look to see if the market is able to get above this middle area. And if it does, the expectation is for it to move up to test the top of the zone. Otherwise, if it fails here, then the expectation is for it to come down and retest the bottom of the zone. And if it fails, then perhaps it move back down to retest, to first retest this support. And if that fails, to retest this support here. For Monday, May 13th, pre-market, this is the reference chart that was given. And last Friday, we saw that the market closed with a range buy signal with a long EOD sequence. So the market was expected to go up overnight and into Monday morning. And the reference chart pre-market suggests that if there is an intraday drop, it is expected to recover. Now let's take a look at the signal. The signal showing a range buy, which is unchanged from Friday's close, and the market did gap up overnight, as you can see. It opened around the 5260 resistance right here, the 5063 resistance. And at open, we had an immediate drop. Now here, and then it went to this 5248 support. So although the system did give the support, it is still, the support given pre-market is still a bit lower. So some traders may have opted to try along here with a tight stop. But the better long would have been to wait for the market to see if it comes down to these levels. If traders had taken this long, they either would have been stopped out for a small loss, since the stop loss should have been tight, or for those with a higher tolerance for volatility, maybe they would have had a 20-point stop, in which case they could have held on to the trade to the end of the day, and they could have exited at about break even. Overall, Monday was a narrow range day, and if you had missed this initial short opportunity, it was a somewhat tricky and frustrating day to trade because of the narrow range. And also, on May 14th, the PPI was expected to come out pre-market at 8:30 a.m. Eastern. So it was probably best not to force any trades and wait to see what the market does after the PPI. And here in the afternoon, we did have a slight downgrade. And normally this might have been an opportunity to look for a short. However, because the the PPI released the next day, I would have opted not to take the trade unless the market maybe if the market went up to just a strong resistance in the afternoon, I might have tried a short. But otherwise, I would have just let it go and wait for PPI. So May 14th, PPI came out at 8:30 ET, 8:30 Eastern. And on days like this, it is very tricky to trade because of volatility. And if you're new to trading or uncomfortable with volatility, it is best to avoid these days. If you do trade, it's recommended that you size down so you give levels larger room for error. And also, just as a note, on the event days like this, the reference chart, I don't rely too much on reference chart because it is highly dependent on the data and the market can move in crazy ways. So here, upon release, you see that the market immediately dropped about 50 points. And it went down to this 5228 support, which interestingly, if you looked up, that was our support. That was our pivot point and our support from the day before. So the market came down and this level, and it didn't quite get down that much, but overall this zone held, and it had a pretty immediate and quick bounce back up. Now let's take a look at the signal. And again, on event days like this, you need to give the levels more room. So your stop loss need to be a little bit bigger, or you want to wait for the strong levels. Don't try to force trade in this highly volatile environment. The market opened at around the 52.48 resist. I'm sorry. The market opened around the 52.48 resistance, and it chopped between 52.40 to 52.60 for the most of the day, and it chopped back and forth. So it chopped between these two resistances. So there were a couple trades you could have taken, short on the short and the long side. And then towards the end of the day, it broke through the high of the day. And once it did that, and another thing to consider is that because it already tested this resistance, this 50-60 zone resistance multiple times a day and couldn't break it, at the end of the day, when it broke through that, it's best not to try to short it, because there's going to be a lot of people closing their shorts, and you could get a squeeze, and which it happened. It squeezed up to 52.72, and also the next day on May 15th at 8:30 Eastern, CPI was going to be released. Again, another highly volatile event day. So again, if you could have gotten some scalps in here, and then around here is probably best just to wait for the next day. On May 15th, CPI released at 8:30 a.m. And again, on these event days, I don't look at the reference chart too much, and I look more at the price action. So upon release right here, you get an immediate move up. And let's take a look at the signal. We have range buy, which is unchanged from the closing signal from the day before. And here, right before the data was released, the system gave us a resistance at 52.78, and upon release, it immediately broke through it. I mean, it was very quickly breakthrough. And it also broke through this strong resistance at 52.85. So at this point, that's a sign that not to try to short the day. I mean, you can look for opportunities to go long, but at this point, unless we see some supports breaking, it's not a good idea to be shorting. We're trading above all the resistances. So, and open, we had a little drop here, and it didn't even get down to the 52.85 level, which now has become support after it broke through. So here, and for the rest of the day, it went up. And here, in the morning, a short EOD sequence did appear. And normally, this tells you that if prices approach a key resistance level, you can short it looking for a drop either towards the end of the day or overnight or next day. However, because the trend is so strong on this day, it broke through multiple resistances, and SPX actually broke through the previous all-time high. So at this point, it's not a good day. It's not a good day to try to short. Just don't try to short it. Just wait. If you really, really want to short, wait till the end of the day and to even consider it. And sure enough, the market kept going up for the rest of the day, and hit a high pretty much right at the end of the day before coming down a little bit right before the bell. Now on Thursday, on Thursday, the reference chart is showing that we may have a possibility of a volatile day, with prices ultimately recovering if there is a drop. And if we look at the signal again, so this is a range buy. This tends to favor buying dips. However, we had a day the day before we had a very strong push up. So this could also indicate a balanced day where and it could be kind of a narrow range day. So here upon open, we're opening around the 53.40 resistance, and the signal also gave us another resistance here. And we had a little shallow drop, but not much. So and then it went up, but it couldn't get to the next resistance. So it went up. Some people may have tried to short in this area with a stop above this next resistance. And if you did, you could have gotten maybe about 20-30 points towards the end of the day. But because the price never really got to any of the supports until the end of the day, even though the signal is showing that you could buy dips, because it's kind of going around in this, it didn't really give us a real drop to go long. So it still there really wasn't a long trade to be made. The only trade was to try for a short around this area with a stop above here, and then you would have gotten 20 to 30 points depending on when you exited. For Friday, the reference chart is showing that there will be a drop at some point during the day, after some consolidation in the morning, possibly. And then if there is a drop, that it would be bought up. And if we look the signal again, it's the same as the day before. And again, it's suggesting that if there is a drop to a support level, that it could be a long opportunity. So at open, we had a shallow drop again, and as you can see, it's basically it traded between 53 16 to 53.25, like a 10-point range for most of the day, until we had a drop here to down to 53.08. So and that is above our pivot point right here. So here you could have tried a long in this area with a stop below the low of day. And if you did, you would have gotten about 20 points, probably a little bit less because, you know, unless you got low of the day exactly, but, you know, about 10, 15 points on a narrow range day like this. This was probably your best trade of the day to go long here and then take it up. And also on these range bound days, it's also a good idea to exit along the way. So if you have long in this area, once prices went rotated back up to the upper end of this consolidation range, you probably want to exit some here, exit maybe half or even a little more than half your position, and then hold the rest with a trailing stop to the end of the day. Now let's take a look. We're going to zoom back out to the daily chart and see for next week. So this is going to be the daily chart through May 17th. So what are we going to be looking at for next week? So here we have 3 closings above this zone. So next week we're going to want to see if the prices can continue to hold this area, and whether, you know, if maybe it dips down to 50, if it dips down, can it hold 5,300 ES? And if it does, the expectation would be for it to go back up to 43.25 area and then 53.50, which is the high right here. And if we can get through that, then we can see some higher prices. On the other hand, if it does not and it breaks down into the zone, then the expectation, and it breaks under 5,300, then the expectation is for it to and really it really needs to break under 53.80 area. And under that, we could see a move to the middle of the zone right here again at around 52.50. And if it breaks through that, then testing the bottom of the zone. So that's what we're going to be looking for next week. So this is a review for this. This is the weekly review for Sunshine AI Signals. I hope that everyone had a good week and have a great weekend.